Now, we are starting the show today with a bonanza of retail earnings. Target led the way with a huge beat on top and bottom lines. Same-store sales at Target rose 4.8%. Online sales rose by more than 40%, and its profit margin rose to 6.4%, up from 6.2%. Now, the picture is not nearly as rosy for Kohl's and for JCPenney. Both of those chains missed on their earnings reports. Shawn Cruz of TD Ameritrade joins us now to break it all down. Hey, Shawn.
Hey, how are you?
Thanks for coming on. Yeah. Let's start with Target. Why is Target doing so well? What is going on there?
I really think it was their ability to deliver on digital, and that's something that has really been in focus for a lot of these retailers, was how are you going to pivot from just brick and mortar to more of an omni-channel where you right-size with brick and mortar and online to address Amazon coming into the space. And the retailers that have been able to go out there and deliver on digital, you just mentioned it, they're able to grow digital 42% year over year. Last year, that was 28%.
Wow.
So they're increasing that number, their ability to grow that. And that's what you want to see. If you remember Walmart got hit a little bit because they had a slight slowdown in their ability to grow digital sales. And that was something investors really keyed in on.
I'm glad you said omnichannel, though, because I do think that when we see those massive numbers in online sales growth, everyone says, see, okay, it's all moving online. But that's not the case. You know, it's still that, you know, you need to do both. Brick and mortar, not at all dead. I mean, yesterday on the show, or was it already a couple days ago, we talked about Target doing a collaboration with Vineyard Vines, and a lot of it sold out online, but also people had lined up at the stores at 7 a.m. to get it. So not the case that even though online is growing so much, no one is going to the stores.
And I think it's interesting when you start putting together the retail space and how things are working out. You have Nordstrom and you have Macy's. It's starting to feel like they're competing with Walmart and Target a little bit for some of that in-store traffic, especially for Nordstrom, because Nordstrom traditionally, when you think, where am I going to go to get Vineyard Vines if I'm not going to an actual Vineyard Vines store? The first place I would think of would be you'd want to go to Nordstrom, not Target. So it's definitely Target coming into that space.
And tell us about the outlook. As CEO Brian Cornell was saying, he's not changing his guidance despite all of the ratcheting up of tariffs, the tension that we're seeing between the U.S. and China. Do you feel like that's very short-sighted, whereas a lot of these other companies are coming out saying, hey, this is going to be a major headwind for us ahead? And
that's really what you want to focus on here. It's not, I think investors are willing to look past a quarter where you maybe have a one-time charge or some one-off event that causes you to miss on earnings or a drop in revenue due to weather-related effects. But when management starts going out there and making adjustments to their guidance, that's what investors really key in on. And I think that's a wise decision for investors to make. And some of these retailers that are coming out and cutting guidance are really getting hit right now. And the ones that are able to maintain or even increase guidance are definitely getting rewarded with investor dollars.
I mean, Nordstrom last night came out and said pretty much everything bad you'd ever want to say in a press release, right? They said our management stinks, and we're looking at a longer-term chart there. That's what you're going to see. Of course, I feel like Target, at least from a trading perspective, still has some work to do because that stock came down pretty sharply after Brian Cornell came out, I think it was in the fall, and said we see no concerns at all with the consumer. And here we are 6 months later, and I think Target still trying to get itself together, even though today's numbers were pretty good.
And I think when you look at the retail space, it's important to also include TJ Maxx. If you do take some of what we're seeing from the retail sector as a read-through on the strength of the consumer, if you feel there's a weak consumer coming up here for the rest of the year, then you maybe want to look at some of those discount stores like a TJ Maxx. You think about it, you go to TJ Maxx, I say that's like the shopping equivalent of Safari. You want to go in there and treasure hunt, see what's in the shelves, see what you can find. So I think you want to start including some of these discount retailers in this entire picture that you're looking if there's going to be a little bit of a slowdown or a little bit of a headwind for consumer spending.
I think the narrative has been that for the last 3-4 years. I feel like it's deja vu almost because people are saying, okay, you got to rely on TJ Maxx, you got to think about Nordstrom Rack, you have to think about Macy's Backstage or all of their lower end, even their subsidiaries. What kind of economy would not let those succeed, right? Like, would there ever be a time where those kinds of retailers would not be important at all because people are shopping at Nordstrom and don't want the cheaper option? I guess I just can't imagine a world in which that would actually be possible.
I think if you're looking at in the space, you make a great point about a lot of these names like Nordstrom. They have a discount line and then they have their full price stores, but they really get the most margin out of those full price lines. And looking at Nordstrom this quarter, they had a 5% drop in their full price stores. That's something that investors are going to focus in on, because one, that creates a margin headwind coming from the top line, and then we still have wage and transportation cost pressures that are going to squeeze them in the middle of the income statement as well. So when you start putting those things together, you're not getting your high margin items out the door, and you have rising input costs. That really puts a lot of pressure on margin. Some of these smaller retailers, think of a TJ Maxx, they're somewhat insulated from a lot of these tariffs because they're almost buying these goods once they're already in the country.
That's true. Yeah.
So they're a little bit insulated from any sort of tariff headwinds, and their business model's already built around discounted pricing. So I think that's why if you're expecting a little bit of turbulence, then maybe I would seek shelter in some of these discount retailers who are designed for a little bit of a headwind from consumer sentiment.
Shawn, just quickly, let's wrap on Home Depot. I know you watch Home Depot as well. Missed on earnings, missed on same-store sales, but I believe beat on earnings, so kind of a mixed bag. And I felt like for a while there, a lot of the news was really good about Home Depot. I remember Home Depot kept being cited as one of the businesses where, not being as disrupted by the move to online sales, because it's the kind of place where you really need to go in person. People want to go, they want to talk to the experts in the orange aprons. So what's going on lately with Home Depot?
Well, I think at Home Depot right now, when you're getting into this busy home building season, that's really what I like to focus in on, because at the end of the day, that's where they really move a lot of their inventory. Inventory efficiency, to me, I think is key to management right now across the retail space. And Home Depot, I think there's a little bit of an uncertainty out of the housing market right now, and that really does affect home builder sentiment, which when you look at new home sales, that will directly influence what's going on with Home Depot. When you look at housing prices, and maybe instead of going out there and building a new home or going out there and buying a new home, you want to go and just upgrade,
DIY.
remodel, do a little do-it-yourself. So they really need to find a way to right-size that, and it looks like there's a lot of uncertainty in the housing market, and it's really difficult for me from where I'm sitting right now to get a solid read-through, because supply and demand and prices are actually doing some interesting things right now.
All right, Shawn Cruz of Ameritrade, thank you so much.
Thanks.
Good stuff.